Today on Smashed, Ebony investigates the concerns casual workers face in the wake of stimulus cuts. Hayley gives us a comprehensive look at what a recession will mean in the long term.
As in like economic recession?
River takes a deep dive into the tempting world of stock investing. And school's in session as Sam weighs up work-integrated learning with economic prosperity. I'm Ethan Ricks, and you're watching Smashed.
For the first time in almost 3 decades, Australians are experiencing the economic fallout of a global event, this time being a pandemic. Unemployment rates have skyrocketed due to the coronavirus, and according to data released by the Australian Bureau of Statistics last month, the unemployment rate has risen to 6.9%. Surprisingly though, monthly hours have seen an increase of approximately 9 million. In response, JobKeeper and JobSeeker was an attempt by the government to stimulate the economy and support those struggling to pay for essentials. But this has been short-lived, with many casual employees who'd previously been benefiting from these schemes no longer qualifying. So, by talking to those no longer on the receiving end, Ebony Kingma set out to investigate how these cuts are affecting real, everyday people.
Retail workers, including many full-time and part-time students, have had to adjust to the unprecedented economic changes due to coronavirus. Loss of jobs and lack of shifts has impacted the positions held by many young Australians, forcing them to rely on welfare packages throughout the year. But as states begin to reopen with no working vaccine in sight, those now ineligible for welfare subsidies are worried about their future security.
For Sarah, a retail assistant from the Illawarra region, being casually employed and having worked her business for over a year meant that she was initially able to receive this financial support from Centrelink. She was willing to speak to me about her experience with JobKeeper and how it impacted her financial situation. Due to concern of privacy and possible repercussions, Sarah's surname and place of employment has not been disclosed.
I was eligible for the JobKeeper payments with the first round. As a mother to children and family, it was great to be able to be relied upon with that amount of money. It's great in the means of helping to pay the bills and things like that to get by. So with the second round, no, unfortunately we did not qualify. We're still able to do plenty of hours, and we're still going strong as a business because we did exceptionally well with the first term. So therefore, not qualifying then with the second round. Number of shifts are still great. It's just that, I guess, being casual in retail, it can fluctuate. So each fortnight can come in with a different income where it was a bit more stability, I guess, with the same amount coming in per fortnight, and you're guaranteed that money. So if we happen to get sick, of course, then I don't qualify to get the guaranteed money paid for that day, being casual. So it's only the hours work that I actually get paid for.
For some students, the effects are twofold, with many having to support themselves financially whilst juggling full-time studies. Many have found that their place of employment has had to make some cuts due to the pandemic, and this in particular has left students feeling the strain of trying to find another job while studying.
Emily Smith, a UAW student, was eligible for the first round of JobKeeper payments. However, due to a change of circumstances at her previous place of employment, she no longer qualified for government funding. I speak with Emily to hear about her experience and the hardships she has faced during this challenging time.
I'm actually on to my second job this year because my first job I had for 2 years shut down because of coronavirus. I did get JobKeeper from it, which was good, but last school holidays, I don't even actually remember what month it was, had my last final 2 weeks and then moved to my next job. So no longer getting JobKeeper now though, but that's okay. But with my new job now, I'm working a lot more than I'm really used to. Like with my other job, I used to only work weekends, and now I'm working pretty much every day, and I'm very behind on assignments. So that's not fun.
I spoke with some students on the UAW campus to hear their experiences with government funding and whether or not it was beneficial to their situation.
So I'm getting paid fortnightly now on JobKeeper.
I lost my job. I was in an RSL and I was only there for 2 weeks and then they closed.
And I'm down about $100 a week, so that's tough-ish.
Basically didn't have a job for a month, so a bit of trouble there with having any finances there, so a bit difficult. Now I'm on a job, I found another job again, so we're all good. Had a lot of support around me, still lived at home, so if I didn't have that, I would have been in a bit of trouble.
Can't afford as much stuff.
It has been a challenging year for all, with the current economic crisis in full force. And for many casual workers and students across Australia, an end to the fallout of COVID-19 could not come earlier.
Yeah, everything's a bit more up in the air, I guess, and a bit more temperamental, I guess, at this point in time, because we aren't actually over COVID yet. There's no solution going forward at this point in time still. No immunisation, with the government. Everything's a big question mark, really, up until, I guess, until they, investigate more with COVID and we learn more, and just moving forward with it all.
We've all been hearing the word recession an awful lot lately, so I guess we all know what it means, right?
Well, what is the recession? As in like economic recession?
I have no idea. Oh no, I'm not doing this. Because I'm not good at it,
Oh crikey, that's a loaded question.
Yeah, I wouldn't be able to define it either.
Recession is 2 consecutive periods of negative growth.
I didn't know that.
There's less money coming into the economy, there's less money being spent, there's less jobs being created.
Usually after something big like a world war or a pandemic, the country goes into a state of financial decline rather than our model of growth, which we normally have.
Well, yes. However, there is no one-line explanation. Of course, you have the media's common definition that a recession is 2 consecutive periods of negative growth. However, there are some more obvious indicators of the country's economic decline. During a recession, household spending as well as business investments drop, and the ability of homeowners and business owners to pay off loans hits an all-time low. In June of last year, there were more than 800,000 small businesses trading within Australia. The ABS predicted in August this year that more than a third of those businesses would struggle to meet their financial commitments. And if there's one thing that young people do understand about this recession, it's that they're the ones being hit hardest by this. Last month, the ABS reported that almost 600,000 young people had lost their jobs, and half of those that remained employed saw cuts to their regular working hours. However, these are only the short-term consequences, and as bad as they might be, the future doesn't look a whole lot better. Economic scarring is said to disadvantage the majority of young people entering the workforce. It'll mean taking up positions that are beneath their qualification, that are lowly paid, and that are disinteresting. But worse, that won't be a short-term sacrifice.
We know that youth have been disproportionately affected in terms of employment, and that employment outcomes, even though we've had some bounce back, we don't expect those employment outcomes to get back to pre-COVID levels for probably 3 to 4 years. And that means, of course, wages growth will be slower. And that affects not just your earnings now, but your ability to save, your ability, what you'll be able to put away for super, it's your lifetime earnings.
This is Nikki Hutley, partner at Deloitte Access Economics. She is a seasoned economic and financial commentator and a regular face on programs including Q&A and Sky News.
I have done more briefings this year for both media and our clients than I think I have ever done in my life, because everyone wants to understand, what's happening now, what's going to happen, and what does it mean for me and my business.
Now, you might be surprised that lower income earners' household spending increased by 20% since the initial lockdown measures came into play. However, higher income earners' household spending decreased by 36%. So recognising that lower income earners have been the biggest benefactors to the economy since the start of the pandemic, was it a good move by the government to cut welfare payments such as JobKeeper?
Well, no, and specifically relating to JobSeeker, or the old New Start, and the supplement, we did some modelling which showed that cutting the supplement the way the government has already done the first cut, and it will take it away completely in December, and we showed that would take around 0.9% off GDP both this and next financial year, and it would be around 145,000 jobs lost in each of those years as well. When you think about, they added stimulus to the economy, people spent it, it creates more jobs, it has the multiplier effect. So if you take that stimulus away when the economy is still weak, it creates what we economists have called the fiscal cliff.
So why do you think they've done it? For what reason?
It's very much an ideological thing with this government and some of us have argued long before COVID that the basic rate of New Start was too low, and that by raising it, you were not only doing what was fair, but that you would contribute to what was already a sluggish economy before COVID even hit us. With the JobKeeper, it's slightly different. That was aimed at keeping people in jobs. You know, the Prime Minister originally talked about getting across the bridge to the other side of the recovery. But that bridge has been a lot longer than we first thought. I mean, we were hoping to be out of all of the stages of lockdown and everyone opened up by the end of July. And of course, in the two biggest states, that hasn't happened.
So if employment opportunities limited, now would be the perfect time to upskill, right? Well, unfortunately not if your interests lie with law, economics, commerce and management, society and culture, communications, and behavioural sciences, with all those courses expected to double in price by next year. But is that really going to deter anyone?
Professor Bruce Chapman from ANU, who is the father of HECS, he invented the scheme. He's done some modelling around what the changes in fee structure do to demand choice. And it actually shows that it doesn't do anything. And HECS is actually, because it smooths things over the cycle, this won't change people's preferences. It will just add to the debt of certain people. But more than that, it presupposes that doing STEM degrees is A, going to get you a job more than an arts degree, and B, going to pay you more. Neither of those two things is supported by the evidence. It may be that we want to encourage more jobs, but we actually have to create the jobs and the companies before we just train a whole load of people for jobs that don't actually exist.
Now, this might all sound like doom and gloom, and yes, it might seem terribly difficult to remain optimistic, but there are things you can do right now to secure the future that you want.
If you have not already touched your super, don't touch it, okay? That's such a strong thing. The value of your money today is, by the power of compound interest, by the time you retire, $10,000 today could be $100,000 when you retire or more for the average age student. Try and make choices that are part of your passion. I understand that people need to find a job, but don't put your entire life career on hold or your dreams on hold because of what's going on at the moment. Train. Studying is one of the best things you can do. If you can't find the right job or a job, invest in training, because there are so many skills. Have a look at the National Skills Commission publishes where skill shortages are. There are so many sectors that have skills, and one of those is bound to align with where your passions and your talents are. And finally, I just say, don't give up. I lived through, as a very young economist, through the early 90s recession, and I know it feels awful when you're in that hole, but we will get to the other side of this, and you've got to keep a little bit of optimism. And I'm really encouraged that there's some amazing things being done to think about being more sustainable and building the renewables sector, thinking about new technologies and what a better world might look like. Think about starting your own business. Think about how you can contribute to a better world, and just don't give up.
Still to come, everything you need to know before throwing the die at stock investing. And is the Australian dream still alive? Welcome to Struggle 101.
During lockdown, there's been a spike in young amateur investors trying to play the market. A report from the Financial Services Regulator found the rate of new stock trade accounts tripled from late February to the start of April. It also found the average rookie investor wasn't up to par when it came to predicting short-term market trends. And that's part of the reason experts are worried.
My name's Stephen Brett. I'm 20 years old and I'm studying a Bachelor of Business at UTS. And I got into investing about a year ago, so when I was 19.
So what got you into it?
Just the idea of financial security. Later in life, when you retire and stuff like that, you want to have a nice kind of nest egg that you've been sitting on for a while that you can really enjoy and spend with your family and that kind of thing. Investing was really the key to getting a bigger return, so just making your money work for you better than what it would in a superannuation.
Have you been doing more investing during lockdown?
During COVID, actually, I think I've been doing less. Job security at the moment, I'm not sure if I'll be able to keep my position because I'm in hospitality, so I'm saving a lot more for emergencies or in case I get made redundant and can't find another job in these times at the moment. A few extra $100 in the stock market isn't worth it if you know, something happens and I need the money immediately.
Steve's in an age group with an increasing interest in something called timing the market. It's when you try to predict the ups and downs to buy and sell. And if you're an amateur investor trying to do this, one researcher says, well, don't.
Research has shown that if you try to time the market, there is a very high possibility that you will lose all your savings.
That's Dr. Angel Zong. She's a senior finance lecturer at RMIT Melbourne, and she's raised the flag over get-rich-quick schemes, luring young people into the stock market. Have you had a lot more friends asking you for financial advice as of late?
Yes, this year, yes, absolutely.
Younger amateur investors tend to take more risks and lose more. Does it concern you then to see more getting into it during lockdown?
The lockdown seems to be a good opportunity for you to buy at low prices. And I've seen many young investors trying to time the market by being a day trader, which means you buy and sell like quickly within 1 or 2 days. But actually, a lot of research have shown that it is very difficult to time the market with huge profit. Even the professional traders, they can't do it. They can't win every time.
Do we have a profile of the people who are investing, those young people? Do we know, for example, if they have, or a lot of them have, a financial background?
From our research, I don't see that many of them have a financial background.
So if without professional training or formal advice, how are some young investors making decisions?
So this is how you find government bonds to invest in.
They say something like 90% of millionaires make their money in real estate.
NASDAQ index, which is basically tech-heavy companies. This is the index pre-COVID, and this is the index now. Which begs the question, are we in a tech bubble? Yes, I do. Austin Hankwitz has a...
Young traders tend to get information from social media.
Facebook.
Reddit.
On Instagram.
Twitter.
I do follow Warren Buffett.
You can see always a lot of questions asked in the social media forum about which stocks I should buy.
It's really easy to get a good background knowledge at where to start.
If you look at YouTube channels, there are so many personal investors teaching other investors how to trade.
My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
I'm very good, Bryce.
Alec Renahan is one of those content creators. He co-founded the Equity Mates Investing podcast in 2017 and says there's been a jump in traffic since the pandemic.
The number one thing for us is just to help people understand the market, help them understand the jargon, how to look at companies, what's noise and what they don't need to worry about. I think a lot of people's perception of the markets is, like fast moving trading floors or traders with 4 screens in front of them, buying and selling multiple positions a day. And for us and, the investors we speak to, the books we read, it's pretty clear that that is the most risky way to trade.
Influencers and social media groups are not licensed financial advisors, and to be clear, Renahan doesn't claim to be. But officials at the Australian Securities and Investments Commission are worried about misinformation on unmoderated platforms.
It's probably no different to back in the day, people sharing stock tips at a barbecue or over a beer and, people losing money that way. I think, while there is a stock market, people are going to want to get rich quick and not do the work and get stock tips from other people and stuff like that. So it's definitely a problem. It's probably always been a problem, but it's a really obvious problem now with social media. And so for us, the main thing is just being a voice of, voice of reason, but just, talking about the long-term investing mentality and trying to talk people out of that get-rich-quick idea that a lot of people have about the stock market.
Which is important because in COVID times, young people can stand to lose more if they make bad decisions off bad info.
In countries with stimulus payments, the surge in trading volume is more pronounced, which suggests that some young investors are actually using the government, the stimulus payment to enter into the share market. And also in Australia, we have job seeker, we have job keeper, and don't forget that we have the early release of superannuation. So our concern is that if you use your early release of superannuation to go into the share market and try to make a quick profit and try to time the market, then you may end up losing your superannuation saving as well.
If that scares you off the share market, then take a deep breath. There's always risk involved in shares, but Dr. Zong says there's a few things newcomers can do to manage it.
Always do your homework. Do not make impulsive decisions. Make sure you initiate any trade after you undertake adequate research. You know what you're buying and diversify your investment. So these are my advice to the younger generation and my friends who's been asking me about investment advice.
Hi, is everyone there? Cool, we can finally get started. Welcome back to Struggle 101. This is the subject that, let's be honest, is designed to show you how you're going to be exploited, and you're going to have to smile while doing it. We're going to be focusing on casual employment and internships today because university just isn't free in this country anymore, and the cost of living is so high that you'll probably actually have to have a job. Doesn't matter your degree. If you're studying medicine or law, even engineering, you're probably going to have casual employment just to fill that gap. So get ready for that no fun, no sun life. Remember, 1 in 5 Australians work in casual employment, so please realize how important you are. I want everyone, before we start, to give me a thumbs up if they work or have worked before in casual employment. River, you've never worked before?
No, I don't work. I do a journalism degree.
Of course. You may hear some stories from your friends losing hours after their birthdays as now they cost more to the store. Other issues of being underpaid in those large major chains to the absolute lack of security can just really hurt the store.
What if I just work off the books?
While it's not always illegal, you definitely end up with no security and even less rights than you have generally in employment. You can't even be certain you'll be paid a casual award, not even certain that you'll be able to be paid in full.
If we're casual, don't we just work and get paid? Simple as that.
That would be wild, but no. You actually, in fact, have heaps of rights as casual employees. I'm just gonna lay down some of the things that you should, and I stress should have. You really should be getting 3 hours of work per shift, definitely paid that casual loadings and extras for Sundays and public holidays. Get a break when working an 8-hour shift for that wonderful, definitely not smoke or lunch break, and not be discriminated for being a casual worker. Unfortunately, as many of you know, without regular hours, your income while studying and living a life can vary. When I was in university, I went down from 18 hours to 4 after turning 21, and yeah, it crushed me. So it's really not that uncommon of a feeling. Now, I'd like to introduce you to our guest speaker, Richard Harding. He's a seasoned careers advisor. He was my careers advisor, and he's the winner of the Hillary Boland Award. We've been talking about the grim reality of casual employment, and he just wanted to add one more thing.
If we look at some things, you may be paid at a greater rate, but look at what you're trading off. Oftentimes with casual employment, you're trading off sick leave, long service leave at the very least. And you've got to say, okay, if I'm getting an extra $2 an hour, does that equate under industrial legislation to what I would have got paid if I was on, say, a temporary contract or if I was on a permanent part-time arrangement? And this is where there are various shades of grey with our modern workforce. It begs the question, exactly what is casual employment? So this person who might be getting a trade-off is sacrificing wage certainty, and some would say wage justice for such a thing. Various shades of grey between those who are casual day-to-day, those who are on workplace contracts or enterprise agreements, temporary contracts, permanent part-time, full-time. I don't have enough expertise to unpack that sufficiently, but I would say that there are trade-offs all the way through with young people. And I return to a previous comment that what have we learned about casual employment? We've learned that it's actually a form of underemployment. We have this dichotomy in our society now that if you look at your statistics on Australians are working as hard as anyone really in the OECD countries in terms of the hours that they work. Yet we also have this dichotomy where we have a lot of Australians who are unemployed or underemployed, who'd like to get more days work. It would seem from a societal basis that we've got these injustices where some people are working too hard and some people aren't getting enough work.
Awesome. Now you've got your degree. It's time to get into that workforce. Let's go. 3 or more years of studying, cramming, and all that education until you look at the requirements for that career you wanted and figure, wait a minute, this entry-level position wants 2 years of experience. Okay, that has to be a mistake. Let's look to the next one. All right, that's 3 years experience. That's also 2 years of experience. That one's 5 years of experience, and here we are, back at nothing again. But that's okay. Internships sound like a great time, right? More education, no money, more education. But if you're ready to work a 40-hour week with less than half being paid for by that casual job that you still hate, then hey presto, I've got you. Except Did you learn anything? Or are you just doing all that work that no one else wants to do? It honestly can feel like a rot as you are working really hard and receiving nothing. Almost feels like you're back at the start again. You may even be promised the opportunity at a chance of employment afterwards, and that chance is considered a luxury, and this is where you end in the cycle. You do an internship to gain experience, to then gain experience, to then gain experience, to then gain experience, and you're back at it. It's almost like leveling up in a video game.
Once that's all over, you have a higher chance of ending up with a job, right?
Well, sure, in some cases, but in reality, re-emphasizing that 1 in 5 Australians are casual, this ends up bringing you back to that likelihood that you'll end up working casual again with no sick leave, no travel leave, and no safety net, restarting this cycle all over again. When it comes to that human aspect as well, for many of you guys, you're going into this career-based work world. You want to start something, and it will be daunting. And employers know this. That's why a lot of these internships target you. They want to grab you for what you have, rather than for what you're worth. So please be smart about it. You'll save hours of your labor and energy, and maybe you'll finally understand the value in your work. That's today's mindset to think on. Know your rights with casual employment and keep your head above it. You'll be okay. If I can just take 1 second to reiterate something that I live my life towards. You can work to live or live to work. There's nothing wrong with either lifestyle. Work as many hours as you like or need to, or work as little as you can afford. But make sure the work that you do really carries over so that you get paid right and it's worth the time that you invest into this.